Hello traders and welcome to another video review. Today is Tuesday, January 20th, 2026. Let's take a look what is going on the economic calendar today. So what do we have here? People's Bank of China loan prime rate in line with the expectations, 3% data from the Asian session. Bunch of data from the UK, average earning index down from 4.8 to 4.7, Claimant count change up from minus 3.3 to 17, almost 18,000, employment change up to 82,000. All of this data beats the expectations. Unemployment rate 5.1%. German PPI down from 0 to minus 0.2%. Switzerland PPI up from minus 0.5 to minus 0.2. Bank of England Governor Bailey will give a speech quarter to 11. Then MPC member Ramsen will give a speech at the same time as well. At 11 o'clock, we will have the current conditions and economic sentiment data from the Germany, together with the economic sentiment data from the Eurozone. Global daily trade price index is scheduled for release at 4 o'clock. At 5:30 we got German BUBA President Joachim Nagel to give a speech, and then at 10:30 we got API weekly crude oil stock data scheduled for release. So that's about the Tuesday. So without any further ado, let's switch to the charts. We'll start with euro dollar. Very strong movement to the upside as indicated by our divergence arrows from the lows of 1.1578. We broke above the trend line, and now we tested the key technical resistance level at 1.1709, 1.1704, and this is the hit of the extremely overbought conditions on the other hand, which is why we are going to place the arrow on this level, indicating that this is key level for today and for the coming sessions, because any breakout here above this technical resistance is basically bullish, indicating strong bullish movement. Very nice bounce. Divergence works. We are testing 100 periods moving average, just a little bit above this, and technical resistance. Please keep an eye on this situation to see what is going on and how the situation might develop. Euro dollar bullish. Cable, almost the same situation. So we trace, as you can see, more than 78% of the last swing to the downside, and then big arrow big candle, green candle to the upside, and then up we go towards the level of, as you can see, 1.34. This is 1.3493. So that's the key level here, the key area here, which is needed for by the bulls to move above it, in order to obviously in order to allow them to move higher. Let me just place new levels here, because those are the old ones. Let me just place the new ones. There won't be much difference here, because they stay almost on the same, on very same level. Technical support might be located now here as the price moves higher, and all of these levels stays here, but they will now be the technical, obviously, support for the bulls. Not too many lines left. We can add one more, but this is post fact, so we can see that there was some kind of a trend line. I mean, there is still some kind of a trend line, orange trend line. Yes, back to the orange color. And it's obvious that we have a breakout here. Strong momentum, 66 points, little bit of the room to the upside on the RSI. Upside limited on the chart. Nevertheless, we might see some sort of the tricks being played by the bulls. So we might have a breakout to the upside and then pullback. So please keep an eye on the British pound. If everything is going up, is the US dollar versus the Japanese yen going down? It looks like we do. So actually, despite the fact that we try to move above the level of 50 on the RSI, there is something really interesting being built here on the 4-hour time frame chart of the US dollar versus the Japanese yen. You can see very strong bearish pressure. And it looks like this situation could look like that. You have the trend line here, and if this candle will cross red, Then we have the rejection of the neutral level on the RSI, and we have the false breakout to the upside that might have big consequences for the bears, because for the bulls, because bears will push the prices down towards 157.33, which is the technical support, and 100 periods moving average, key levels for the bulls. So please keep an eye on this current situation here. It looks like this trend line will be rejected, and all this movement, this breakout to the upside might be considered fake breakout as well. Very, very long upper shadow on the US dollar to the Japanese yen. If US dollar is going lower, let's take a look what is US dollar doing. US dollar index obviously should go lower. Yeah, it should go down, and it's going down like no. To right now, we're testing 100 periods moving average 98.65. We're testing 100 periods moving average and the extremely oversold market conditions on a 4-hour time frame chart. So we again went from the extremely overbought very, very quickly to the extremely oversold. There is some sort of the support here for the basket of the currencies in USDX, in USD 90. This is 98.64, but will it hold? We don't know it. We don't know it whatsoever. If this situation here escalate and we will have another push to the downside, the next target for the bears is located roughly around this level here, 98.13. So that's another technical support eventually. So please pay attention to the bearish pressure on the US dollar index. It looks like the market wants to go way lower or it bounce. New all-time high on gold. This after the very short correction was made here, 4,725 is the new level for the gold. As the gold keeps moving higher, nevertheless, this is another bearish divergence in progress. You can see that the market keeps doing higher highs, but the momentum, as you can see, is not making this higher highs, right? So this is a multiple bearish divergence setup, which might have very aggressive consequences on the short-term time frame, like 4 hours for the gold, right? For now, everything looks good. We have a set of higher highs, higher lows. Nevertheless, we are doing it on the lower momentum. They tried to resolve the bearish divergence. They did it. Momentum went down to the level of 50. Then we have the new high. Again, new high was made on the lower level. And now the Bitcoin, as you can see on the 4-hour time frame chart, Bitcoin keeps falling lower as there is massive sell-off of the Bitcoin. Nothing happens, even despite the fact that we hit extremely oversold conditions. Yesterday, pullback of around the 100 periods moving average was too small in price and time to consider it super effective. So right now we broke below the yesterday's low. Local low is 90,771, and it looks like the market wants to go back to the sub 90,000 levels after failure to break back above the level of 100,000. So we are back inside the same consolidation that we used to be before. This is like end of the year Christmas consolidation, Christmas end of December Christmas and end of the year consolidation, and this is the top of the consolidation. Let me just make this lines a little bit thicker so you can see what is the low of the, because right now we are in the middle of this consolidation, right? So that's not the end of the world yet, but the pressure, bearish pressure, is very, very strong. This is the consolidation low and the technical supports level, and this is the extremely oversold conditions. This is the roughly middle of the range, and as you can see, that this correction here, this movement to the downside, this sell-off is the biggest sell-off since this correction here. So you can take a look. If we zoom out, you can take a look a little bit. There you go. So we are back inside this consolidation here. So it doesn't actually look bullish for the Bitcoin whatsoever. That there might be some sort of the bounce because of the technical reasons, technical bearish, extremely oversold conditions, but it looks like bulls are having problem moving away from this consolidation here. If they can't go more than $4,000 higher. They can't break above the $100,000 level. Then we might see sooner or later test of the sub 90,000 levels. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.